Hello and good afternoon. Toby Lab from the Accounting Club, where we enable you and your business to succeed. Today, I would like to talk about some things you should consider before the end of the tax year. The UK tax year runs from April to March every year, and we are approaching the end of March. And you should, there are a few things as a business owner, as a taxpayer, a few things that you should consider before the end of the tax year. Number one, review your income levels. We all know that if your income is at a certain threshold, your tax rates can be different. So check that your income levels are within bands that do not suffer high tax rates. If they are, and there are some, if they are, then you need to consider, so what can you do? Unfortunately, if there's nothing you can do, it is what it is. You will have to pay the tax. But at least having the knowledge of your income level can prepare you ahead of your liabilities. Okay, so if your income is above £50,270, you will start paying tax at 40%. Income below £50,270 is taxed at 20%. If your income is above £60,000, then you will need to consider the high income child benefit charge. Okay, if you or a partner or your partner, either of you, earns £60,000 and above, and you are receiving child benefit, then you will be subject to the high income child benefit charge. Now, if your income is above £100,000, you begin to lose your personal allowance. Okay, so in the UK, you can earn £12,570 tax free. Every individual has that allowance. But when your earnings reach £100,000, you begin to lose some of that allowance. And if your income goes above £125,000, then you lose all of that allowance. Okay. If your income is above £125,000, income earned above that threshold, income earned above £125,000, just using precise figures here, there could be slight differences in the rounding, where your earnings exceed £125,000, income over and above that will be taxed at 45%. So if you are a high earner, okay, you may want to consider taking a holiday to reduce your pay, making additional pension contributions to benefit from tax reductions. If you are a charity giver, if you give a lot to charity, you can consider increasing your your donations to charity, and you can get some relief on your tax return. By the way, if your income is greater than £100,000 per annum, you do need to complete tax returns. Right, number two, dividends. You need to consider what your dividends are going to be if you are in control of your dividends. So if you run your limited company and you draw dividends, you are in control of your dividends, and you can consider your income level when it comes to dividends. All of your income up to £50,270 will benefit from the lower rate of tax. So salary plus dividends plus car benefit plus rental income, all of that will benefit from the lower rate of tax. Income above £50,270 per annum will suffer the higher rate of tax. Okay, so you need to consider all of your income, not just one of your income. So basic rate for dividends is 8.75%. So if all of your income, including dividends, fall below £50,270, £1,000, then you pay a lower rate of the lower rate of dividend tax. For the 2024 for this tax year, there is a tax-free allowance of £5,000, the dividend tax-free allowance of £5,500. So if you earn £1,000 in dividends, 500 of that is tax-free. Number two thing to consider is pension contributions. You need to, if you put money into a pension, then before the end of this tax year, before the end of March, you can consider increasing your contributions into a pension scheme. As an individual, you can contribute up to £60,000 per year. If you have not been contributing before, you can use your unused allowances. So let's say you did not make a contribution in the previous year. That means that allowance of £60,000 or 50 is available, right? So you can utilize that in this year. I have talked about charitable donations. If you are a charity giver, if you support charities, make sure you are donating to UK registered charities, and make sure that you are providing your charitable donations to your accountant or tax advisor so that you can get your tax relief. Now, this relief will only be available to individuals whose income exceed the standard threshold of £50,270. Number four, make use of your individual savings accounts. Okay, cash ISAs, stock ISAs, pension ISAs, any income you generate from there, those ISAs are usually tax free, so you can increase your contribution into an ISA, usually up to £20,000 per year. End of the year, this is usually a good time to consider your trading structure. If you're self-employed, you may want to consider trading as a limited company if your income is above a certain threshold. Then number six, I believe, number six, capital allowances. If you're a sole trader or partnership, or you are coming to the end of your company's financial year, it might be a good time to invest in infrastructure, computers, commercial vehicles, assets that will where you will claim the full cost as a deduction from your profits. Okay, so investment in infrastructure will help reduce your tax liability. So these are a few things to be considered before the end of the tax year. If you need any support or further guidance on these things, do feel free to get in touch, and I will be able to provide assistance to you. Once again, Tobilab from the Accounting Club, where we enable you and your business to succeed.